Good morning, good afternoon, or good evening, depending on your perspective on the world. And welcome. This is Brandon Wendell, Chartered Market Technician. I'm going to be doing a little analysis on gold and silver futures. Decided to share that with you, and hopefully you enjoy this video. And if you do, please don't forget to subscribe, and that way you'll be notified when new videos pop up every week. Anyway, we're taking a look at the gold daily chart, and basically, we've been a bit choppy, but somewhat bullish over the past couple of weeks. And as you can see here on the chart, we just recently started diving. However, when we came down in this area of demand, the RSI did hold above 40, which typically means that demand should be able to hold and push back up. Now, on the final day of trading there on Friday, you see that it did pull back down quite a bit. So we need to be able to start pushing back up and hold 40. Otherwise, if we start stalling, maybe make a new low. As we haven't made a new low yet compared to Thursday. Friday made a slightly higher low, but if it does start to make a lower low and we go below 40, then expect prices to continue to move down. However, again, if we can hold that, then expect prices to rally back up and maybe even make its way all the way up to 1925.9 area of supply. Taking a look at the smaller time frame here from the gold daily down to the 4-hour time frame, just to get kind of a fine tuning here what's going on. You notice we had a positive divergence where prices made lower lows, but the indicator didn't quite do the same. It's just slightly lower, not nearly as much. As a matter of fact, at this bottom right here, we were much higher than we had been before. So that is bullish. And then, of course, right here, we bounce again, but didn't go below 40. Well, that would be a confirmation of a trend reversal because we're making a higher low. All we need to do to really confirm all this is make a higher high. So I'll be watching this on the Sunday open going into Monday. If we hold that low and eventually push a little higher, then we should be able to continue to move upwards in price. This was the retracement that we had. We had almost a 100% retracement from the previous move up. We pulled back very, very deep. So again, just kind of keeping an eye on that to see if we can hold these lows and break to the upside, then it should be able to continue upwards in the 1900s for gold. On the 60-minute, there is showing a little bit more weakness here. We've gotten actually above 60 and below 40, so it's kind of back and forth. If, for instance, we do make a new low, and like I said, we just tried to confirm a reversal here, but then failed by making this new low. So there's a little more weakness. But if it does start to show a little bit more weakness, if we break down through this demand zone, then basically I would expect it to continue down to 1760 or 1725.6. So not sure exactly which way gold is going to break yet. I'm just kind of watching to see if we make those new highs or new lows and trade the direction of that trend. Obviously, since there's a little bit of indecision, there's probably better opportunities out there than gold. Moving on to silver, the weekly chart, I was looking for an inverted head and shoulders. We actually had a close above, and I usually trade the retest. And on the retest, we actually broke down and didn't hold. So obviously, there's no chance that this is going to continue to move to the upside. Silver's looking much weaker. Usually, when you have a failed reversal pattern, it becomes a continuation pattern. So watch for that as well. On the daily chart, that was the weekly we were looking at before. You can see the failures. We came back down. We've retraced more than 100%, which means we may actually come down to the 127.2% retracement of the previous impulse up. That takes us into the daily demand zone here at 22,730, 22,185, and we're below 40 on the RSI after a divergence. So when you have a negative divergence, it gets confirmed for a trend reversal when you actually either break 40 or you make a rally that fails to get above 60. In this case, we broke 40. So I'm expecting any kind of balance to be met with heavy resistance and a push to the downside. So I expect that we're going to be able to continue to move down. Even if we get a slight bounce, we'll make a lower high and ultimately either bounce at 2273 or even continue lower. On the 4-hour chart of silver, we're seeing again more weakness, lots of bearish pressure. We're seeing that we've already changed trend. We've got lower highs and lower lows, already broke down here again. So if we do get a bounce, I'm actually looking to short 24.17 to 24.33.5. And if not, then maybe the higher zone, but it's probably going to stall out at the lower zone here. If it even gets there, we may end up forming a new zone right where we are right now. It's just a lot of basing here, so I like the upper zone better. So I'm looking for selling at 24.17, targeting the 22.18.5. And then second target would be 21.625. So let's see, 60-minute time frame, just kind of whittling it down a little bit here because we were just looking at the 4-hour. So on the 60-minute, you can see we have this impulse to the downside that is currently retracing. And we did actually bounce at a 61.8% retracement of the previous impulse. So you see the correction. Here's our impulse down. So if we retrace to one of these levels, yes, we have the supply zone, as I mentioned, at 24.17 from the 4 hour, but we may not even make it that high. We may end up stalling at one of these Fibonacci levels and then continuing to move down to the extension of 2267. So that's one thing I'm going to be watching for. Again, on Sunday evening going into Monday, if we can just retrace a little bit, there might be a shorting opportunity when the fib levels on the retracement, if we start seeing that weakness coming in, and again, targeting that first target of 2267. Going down to the 15-minute chart, just kind of see a little fine tuning. If there's an entry there, there actually happens to be a supply zone that lines up with the 50% retracement. So if you're looking for a higher quality entry to drop down into the low 22 area, the 2326 to 2330 is probably one of the better areas there. It lines up, like I said, with the 50% retracement and happens to be a drop-based drop supply zone. So that's kind of what I'm looking at right now on gold and silver. Gold, I'd stay away from. Got a little bit of indecision, not sure exactly which way it wants to resolve itself. With silver, we got a couple shorting opportunities potentially that are looking a little bit better. So hopefully you enjoyed the video. If you did, make sure you subscribe. That way you'll get notified for new videos coming up. And until next time, everyone, trade safe, trade well, and take care.